What is good? What's going on? I hope everybody's doing well. Hope everybody's had a good week. Had a nice weekend to just be able to rest and relax. Hope it's all been well. We're going to get straight into it. It's probably going to be a bit of a brief one again, just because of where we are in relation to price. We aren't necessarily in the, let's say, best spot for analysis sort of thing. It's kind of intraday analysis is going to be lending more importance per se. But yeah, all I'm marking out here is you guys can see we have accumulation, clear manipulation, clear distribution, inversion, or down here if you take the volume imbalance, change in the state of delivery in here. So standard deviations from there, and all I was doing with this one was just seeing where a perfect swing is of our intra high to the low we put in. All right, things that I've been looking at, and I actually made short form videos on it, is these daily order blocks. Daily order blocks play a very important role. Very, very, very important role. Institutions, not sure where I heard this from, but institutions trade using daily, 4-hour, and weekly levels. They don't trade using lower time frame levels. Why is that? Because this is all that you really need. It simplifies it down. It makes life easy. So you can see we have a order block here. The order block is only created with this up close candle. We then get a propulsion block by trading down into the order block that was created. Thus, propulsion block was only created upon this candle. What do we then get? A sweep of that candle's high. Similar thing. Up close candle, sweep the high, go take the low inside of the gap. Not quite sure what happened there, but inside of the gap. Now we do the same thing. We have a fair value gap here, but it doesn't matter because of the volume imbalance or the new day or new week opening gap. I think that one is a new day opening gap. So if you draw out your fair value gap, it looks like this. Then again, we have one here where we don't even trade inside of the range, we trade to the volume imbalance, daily BISI. And then the same thing here, we have a daily BISI. And I actually got some questions asking why don't I just draw up like that on the one candle. It's because if there's two in close proximity, you can assume that that whole range is imbalanced or inefficient in delivery. Like, does it make sense for me to draw it up like that? Yeah, I guess sometimes, but when I'm teaching or explaining things, I just like to couple them together, show you the full range that's I believe to be at least an inefficiency on this time frame. But yeah, just taking a look at the weekly, like straight expansion does look like a meme coin. Normally after like huge weeks like this, we can expect a consolidation kind of looking candle like that one. So maybe if we take the high, go put in a high somewhere, then create a body like this, I assume that would be like a normal looking candle for this week. Kind of looks like a mouse or a controller, but yeah, so there's not really all that much to be looking at, right? So me personally, what I'm going to be looking at for Monday is, let's get rid of all of this. So we obviously have the daily BISI there. I'm going to be looking at this low, going to be looking at this high. More than likely, without any news, we gap lower. So if there's no bearish or bullish news, I reckon we gap lower. We fill the gap and fill this range that potentially would have been inefficient upon a gap. And then we look to continue higher throughout the rest of the week. Like, you can't make assumptions based on, well, you can make assumptions. You can't predict what the market's going to do. Why I say I want to see us gap lower is, if we look here, this is Friday. The market gaps lower, which we can see here. So the market has gapped lower from the Friday open. We've manipulated lower and then distributed higher. Now we have Friday again. All right, we gap higher, we manipulate lower, and then distribute higher. It was kind of if you've been following along for a little while, it was the same relative pattern that we were creating within this range, where we would gap higher, I'm not exactly sure where it is, but like 4 times in a row. Upon a new week opening gap, we would start here, we gap higher, we trade higher, stopping people out from the prior week, and then we take the lows. And we do the same thing. So we close here per se, we gap higher, go stop everyone out, and then go take the lows. And we do the same thing, we close there, we gap higher, go take the whatever range in there is inefficient, and then continue. So for me, up until we actually start respecting like 4-hour bearish PD rays or get a daily reversal sequence, which would be like sweep the high, put in a down close candle, and then maybe an up close candle without sweeping this high. So say that high is there, and then the next candle sweeps the high, maybe displacement on that candle, and then something like that. That would be the weekly profile, I believe, that we are then going to get a reversal, or at least then have accumulation, manipulation, distribution. But yeah, so what am I looking at? Just because we have had this internal sweep inside of this fair value gap, inside of this daily, I expect a continuation. Let's scale down a time frame. All right, it's very, very clean. We have that gap there even on the 4-hour. We have this internal sweep here. We did go up and take this high, yes, but was there any reluctancy for price to want to then take that high and come off the top? No. So what's that mean? We are still delivering from sell side, which is right there at that low. That's our sweep. It's our stop hunt. We're delivering from sell side to buy side. Where is buy side? It has to create buy side. Anytime there is a reversal like this, what does it have to do? Like even a marginal reversal, it has to create a high, resweep that high, resweep again, and then it can start doing something. I just kind of get that. Creates a high, down close candle, resweeps that high, resweep again of that range over there, and then a minor retracement. It's the same profile that I was just explaining, whereby we'd have to have a daily candle like up close, then maybe one down close, and then sweep those down close, and then continue, sort of thing. So what am I looking at? 4-hour time frame. We have these. We have these 4-hour bullish fair value gaps. 4-hour bullish fair value gaps. I want to see price manipulate inside of here, put in a SMT with ES, and then look to trade higher. I'd want to see a sweep of that high, then that, or I'd want to see us gap low inside of here, wick, and then we can look to expand throughout the rest of the day. I would want to see us like Monday open. The other thing we could do, like potential relative equal lows down here, is like we could inverse this, go take the relative equal lows and use that as like this to be like a manipulation leg, 3 drive pattern, and then look for a displacement. Like that's very possible. Is it probable? None. These are all theories. They're not. I would say they all have an equal probability of like 15% of playing out, because there's only so many scenarios that can occur. But yeah, either a 4-hour of that low or that low, that would be very nice, because again, we are delivering from sell side. So until we have a reason to stop delivering from sell side or a reason to stop delivering to buy side, we should continue to respect PD rays, bullish PD rays or bullish gaps and things like that. The other thing is then if we have a bullish gap higher and then we start to run away, I expect little to no retracement inside of that bullish gap. Now on the hourly, let's just see if that confirms. Like here, the hourly kind of looks slightly different. Like we obviously have this accumulation, manipulation, distribution. We hit our overextension here. Of course, if I do take it to the wick, yeah, it's only 2 to 2.5 within this range here, but even still, that's prominent enough for a reversal. We've had a down close candle put in with an up close with a sweep. So now I'd want to see us inverse this gap inside of here. I'd want to see us inverse this gap, inverse the gap, come back up to the high, come back down into this level, and then go. That to me would actually be like perfect. That would be primed. That would offer a 50% retracement inside of this range here, something similar to that. Go rebalance this whole inefficiency, leave a portion of the 4-hour open, maybe even just retrace like this neckline here. A neckline is no fancy concept at all. It's just a terminology used by support and resistance traders. But yeah, that's kind of what I would want to see, something like that. That's some very clean profiles or profiling of what price could do. The other thing is we could just get like a minor tap and run. Like I said, since we're delivering from sell side, we have no reason to stop. This is a clear low resistance liquidity run. I do think though, if we are to inverse all these, we then go take the lows, obviously, maybe even trade into this old new day opening gap that's been unfilled. But in my opinion, the market doesn't have to stop trending. Like if we go look back at like the daily time frame, but over here, like what happens after we get our manipulation and like a minor retracement, which is what I would call here. So we have this leg up, but we haven't had any stops since we got to the highs. And then what do you kind of get from the highs? You normally get like a stepping stone delivery, but even still, we've just accumulated and then continued distribution. So where we are in price isn't the easiest for anyone. But those are the things I kind of want to see. It's kind of hard, in my opinion, to overanalyze this situation right now and try and create or force something that's potentially not actually there. So yeah, I'm gonna leave it there. Just like 30-minute time frame. It's all the same. Like this looks clean for like an accumulation manipulation. We could like potentially predict and expect like 2 to 2.5. Let's jump back over to the 4-hourly. The hourly. Maybe we go take that low, trade inside of that gap we were just looking at there, and then reverse.